Hello, everyone. This is Noah and John. We are from UrbanDigs. This is Talking Manhattan. And Johnny, we're going legal. Okay. A lot of legal things going on right now. And we got our good friend, Jamie Heiberger Harrison here. We've had her on before.
Yeah. Oh, pleasure, guys. Great to see both of you.
We love Jamie. Thank you, Jamie. She works at SDK and Heiberger LLP. Okay. She does a ton of transactions. She's going to tell us what she's seeing on the front lines of the legal side, which is kind of where all the action is right now. Right. So without further wasting time, Jamie, in today's COVID world, what are the top legal challenges that you're seeing that are delaying deals from getting executed today?
You know, I think one of the biggest things that I've noticed of late is when it comes to the financing contingency. I'm sure you guys are hearing it and seeing it. So many deals in your, below even just if you focused on just below $1 million, which there's definitely a certain number of them, or maybe it's below 2. I think that the numbers were about 60% of deals were below 2 million, if somewhere around there.
Yep.
Yeah.
In those,
even more. Yeah.
It's very likely that the buyer does need financing. And what happens is you are getting these multiple offers. Clients are losing deals. They're losing deals if they don't sign up fast enough. But at the same token, it takes time to do the due diligence. And one of the big issues is when there's not a financing contingency and something comes up in the due diligence, how is the buyer going to sign a non-contingent deal when we're seeing banks really get stricter on the underwriting process? And what if it's the building that they won't loan against? So that's really one of the big challenges that I'm finding, that we do need more those building contingencies more than we did in the past. So not necessarily about the purchaser, but just the building.
No, that's interesting. And I'm curious, are you seeing more and more buildings basically come off the financing list from the mortgage banks and sort of throwing a wrench into the process?
Well, it's not that they're coming off the list. You know, we were doing a deal not that long ago, and it was a land lease building, and it wasn't about it being a land lease. In this particular transaction, it was that there were too many commercial spaces that were not rented, and the high concentration of commercial without collecting those rents, the banks just they just weren't going to loan. And we had to cancel the transaction, and that hasn't happened in a really long time. And it's the first time that we've had issues. You know, I had a new development that we had a commitment from one bank, and lo and behold, gets to underwriting, and they're not going to fund the loan because of the number of sales that were already, deals that were already in contract. It wasn't high enough. And so we had to switch lenders. You know, when you hear those things happening and you have a client that comes to you and you know that your client can't close without the financing, you really need to get them that protection. And now you're changing the terms at the last minute. So it's, you know, it's certainly a challenge, on top of just the challenge of people getting fearful that, well, what happens if there's another wave and I can't move out of where I am? And people still want those COVID protections.
Right. So Jamie, are sellers trying to get that contingency? But I mean, this is like no environment for sellers to even ask anything, right?
Right.
But I can understand what you're saying. I mean, so for people that are new to this, what you're saying is that, like, part of the close of loan is the banks have to fund that loan, and some of these buildings are not passing the test, right? They're not fundable, as you're saying.
Correct. Or you know, it just might be a challenge, and it just might take some time, and
right.
Those risks. There's also the other challenge that I'm finding, and it's happening. It happened to me as recently as this morning. I just had one of my brokers I work with had contacted me this morning that their deal did not appraise. And that's another big challenge, I think, that we're not only facing now, and it's going to continue, because unfortunately, when you didn't have a lot of things selling and we had this downtime, where are these comps coming from? And right. So if it doesn't appraise, it happens to be that I had a financing contingency on this one. So it's real simple. The owner is going to need to reduce the price, or my client may very well cancel the deal. You know, it's challenging. You know, it's a challenge where there's apartments that might need work, and buildings have stricter rules than they did in the past, where maybe only limiting the amount of jobs that can get done in the building, and therefore those units are getting, you know, tougher to sell.
Yeah, I mean, this is something that everyone doesn't see often, these things that you're talking about, Jamie. Can I just ask you, generally speaking, I mean, we're in November right now. I mean, I think the data show me that the sales market's coming back a little bit compared to the crazy slow shutdown period. Are you seeing that too, in terms of?
I really am. You know what? The deals may not be the same dollar value that they were in the past, but when I look at the volume, I happen to have looked because look, we're a new firm, and we wanted to see, well, what do things look like from October 1 through October 31st? And the volume of closing files, while it definitely wasn't the biggest month I've ever had in my career, I think we had about 50-ish new transactions, not including the bank deals that we get, which was not really, pretty good, pretty online where things generally would be, So I do think that the volumes picked up, and I will say it's not. I've had handfuls, more than one handful of deals that my clients actually ended up losing the deal because they didn't sign quick enough. And that does happen. Some of these people, I've had multiple deals where the seller just wants to sell. And if they start seeing it's not getting signed fast enough, and you're going into that next, going through another weekend, the buyers really have to be careful, because if the seller goes and gets that all cash offer when they had a contingent offer prior, they may very well kick your deal to the side, come Monday morning. And that does happen. So people have to be prepared to move quickly.
No, I think that's a great point. I'm just curious, if you look at it from the agent side, what kind of things should agents be doing today to prepare their clients for tomorrow and, down the road for smoother transactions?
Yeah, I mean, I think it's, it's that dancing that fine line of not wanting to be too pushy, but being realistic and educating your client to understand that, when there are multiple deals and when there are contingencies, that there's a risk that the seller is going to sell to somebody else, and just getting the funds ready. Oftentimes clients do need to move funds, and, it's always to first wait to move that money. And now all of a sudden you're making it just till that Friday. Well, guess what? If you don't send the wire soon enough, it's not going to hit by Friday. You're not going to get the countersigned contract, and then you're just going to push you into the weekend. So I think making sure your funds are available is key. Making sure that you've done the homework that you need to be doing. If you're working with the bank and you are getting that financing, get as much information over to the loan officer as you can to get them a level of comfort, before the deadline.
Interesting. And if I could just follow up quickly, because one of the mismatches sort of in terms of, what's happening on the street and what the media is reporting is, you think that buyers think that they've got the world in their hands right now. And in many cases, that's true. They do have a lot of leverage compared to where they did. But I think there might be some overreach. I'm curious if you're seeing some sort of things that would have not been the case a couple of years ago, sort of being de facto now, like people trying to bring in home inspectors for what would have normally been just taken care of with a final walkthrough or things like that.
I haven't noticed on the inspection front so much. I think that there is definitely a tendency where you can get some buyers thinking like, hey, no one's buying here, which isn't true at all. I mean, when you, like I said, in that price point below 2 million, those deals are going. And I think that people shouldn't take for granted that the deal is going to be theirs. I think that, I've noticed where there's, just for example, I'm doing a lease right now with, there's a broker that contacted me yesterday, and she says, I've never had this before. The tenant comes in and gives a list of 30 items that they want fixed before they move in. And, historically that hadn't happened. Certainly on the tenant front, I think that people are definitely going to milk it. Everybody knows that the rental market is terrible. Not the same, on the sales side of things. But certainly I do think that people push the envelope a little bit, asking for a little bit more than they would normally get, whether it's leaving behind the furniture, or whether it's, throwing in the storage or whatever the additional extra is. There are definitely concessions being given.
Hey, Jamie, when you think about putting deals together in the rental market right now,
Sure.
Are we like, is this like the worst? Are we at the worst part of the rental cycle right now?
I mean, I would say that if I had to pick the bottom, I think we're sitting in it. Yes.
Because it feels like we're sitting. I mean, I'm trying to think, because the sales market recovered from the bottom, but the rental market seems to be still to.
Yeah, I mean, look, sales market's still going to be somewhat down, but is the number big? Probably not. It's probably less than 20% at this point. The rental market is completely, it's horrific. It's terrible. I do think if somebody had to guess where the bottom is, I definitely do think we're sitting in it. And I think the worst possible scenario and problem for all owners right now with respect to rentals is the fact that the owners have a duty to mitigate if their tenant leaves. And you get into this constant like headbutting of tenant wants to break the lease and landlords doesn't want to let the tenant break the lease, but the landlord's not understanding that they don't have a choice. You know, if a tenant wants to leave, they can leave, and you have a duty to mitigate. So it's really made the, it's going to create a very big challenge for owners down the road if they try and go after the tenants for that lost rent and they didn't take the proper steps to mitigate their damages.
Yeah, that's a key statement. So I just want to ask you real quick on the sell side. I know it's hard to figure this out because you're doing all the legal and you're not really analyzing, but if you had a guess about how much discounts are there for, like, I guess 2 million and under is one market, and then I guess the higher price points are different. Could you speak to anything, or?
You know, I rely on the brokers on this, and you know what I've been hearing a lot of is basically that the numbers already came down pre-COVID. You know, I would venture to guess that you're probably looking at numbers that maybe they're within 10 to 15% down on the sales side below 2 million.
Yeah.
I don't think that they're down more than that. And I would say below 1 million, you know, even smaller. Above 2 million, I would say that they're definitely down, you know, who knows, 30%, 20%, 25%. But below 2 million, I would say it's pretty insignificant.
Yeah, that's kind of what our numbers are showing, around 10-12% in the below. And that kind of even was, you know, it was a little higher in June when I guess the shutdown was, but we've come down. So you're echoing kind of what the data is showing, and the data is still coming in. So.
Oh yeah, of course. And it will continue. You know, we're probably going to hit a really cold time of year eventually. Yeah. It's going to be a tough, you know, might be a tough few months, but hopefully, you know, I'm optimistic. I think that certainly the vaccine, you know, hearing the news about Pfizer yesterday was really good news, and certainly can get everyone sort of optimistic as to what the spring season will look like.
Right.
So that's, I think we all can be excited for that.
Yeah, and again, like as things start to get back to normal, as airlines start coming in, as people start flying in, and tourism starts coming back, and businesses start sending their workers back in. I mean, this is going to come in like surges and then delays and then surges and then this and then that over a period of time. But the point is that if you look at all these dynamics that are out there in the field today, from a buyer, from a renter, well, it's changed for the buy side already, but from the renter, this is it.
Yeah.
Like this is the time, like the blood's on the streets and you're sitting at the bottom there. You're not really falling anymore. Just kind of, yeah.
I mean, it really reminds me, look, I remember during, you know, right after 9/11, you know, I had a property downtown that I owned. I mean, the rental market was crushed. Yeah. I mean, I don't know statistics as to, I'm sure Jonathan Miller's told us, or Donna, but I don't know the statistics comparing, you know, after 9/11 to now in the rental market, but it's got to be close. It just has to be. I can't imagine it being that far. And look, it turns around, and this will turn around too at some point. It's going to be, I think, I do believe when we have the vaccine and, you know, death is pretty much off the table, I think we're going to see a really, really fast recovery of people getting back to normal and New York City feeling really safe again. And, you know, hopefully the market taking a nice little, you know, uptick into 2021.
Yeah, if I could just sort of, you know, dwell on that for a second, I'm curious if you could kind of take us into the mindset of who are your buyer clients. Have they been talking to you kind of about what makes them excited to purchase in this market, and conversely on the sales side, what are sellers thinking? Are they leaving the city or just trying to ante up? Or
I've seen it all. I have a buyer that, you know, we just signed somebody up at 111 Murray yesterday, and actually they closed at 111 Murray yesterday, and they are so excited. I heard from both the husband and wife yesterday, and they're really psyched to live in that building. And I think there's a lot of people out there that feel that way. And why? Because they got a purchase for a lower price than they would have gotten it pre-COVID. And being able to get that extra bedroom and being able to, you know, just get more than you could have gotten before. People are excited about it. And I think there's a lot of that's happened.
Yeah. And these windows, I mean, I know it's been open for a while. It's been open for 8 months now, this window, and it's been declining a little bit in the sales market. It's still wide open in the rental market, but you know, it changes. Something happens, like you wake up one day and then all of a sudden, like the news, like you just said, things change, and now it's a little bit of a different world than it was just yesterday.
Correct.
That's how these things happen. So you gotta, as a buyer renter, you gotta understand, if you're waiting to see that recovery, you're probably gonna miss it. So,
Oh yeah, question about it. I mean, you can't call the market like that. You just have to, we know it's down, whether it's the lowest or not, it's not going to matter. I mean, depends also what you're buying, what's going to happen with all of these, older co-ops on Park Avenue that need, tons of renovations. It's good to have there. Are those prices going to go back up?
Yeah, I hear you. Jamie, thank you so much. John, find any questions for Jamie or no?
No, I'm just curious, Jamie, if you just have a couple seconds to tell us kind of what your final thoughts here are for buyers and sellers in this market, just from the from the legal front, what things should they be focused on to sort of guide themselves to either a purchase or a sale?
Sure. I mean, look, just keep in mind rates are still low, even though they may not be as low as they were. They've only inched up a little bit. You might not get that 2.5%, but you're still going to have that 3%. It's still a really good rate. Prices are definitely on the down. You're still able to get more than you were able to get a few weeks ago. So if you were thinking of buying, I definitely think now is the time to take advantage of it and, go for the property and lock into the rate. We don't know how long they're going to be this low. And I think, I think it's a great time. I mean, if I was even remotely in the market, I would be buying right now. I would love to I would love to buy some investments and take advantage of, the lower price points.
Yeah, I feel the same way. I wish I had a few $1 million just to put into some assets right now. Jamie Heiberger Harrison, thank you so much for your time. You're of SDK and Heiberger LLP. You're awesome. That is John Walkup. I am Noah Rosenblatt, and we are from UrbanDigs. We're talking Manhattan, and we'll catch you next time.
Thank you so much.